What is happening in the Edmonton real estate market right now? In this video, I'm going to give you the most up-to-date information. So whether you're buying, selling, or investing in the Edmonton or Greater Edmonton area real estate market, you can make the most informed decision possible. Spoiler alert, I'm going to get right to it. It is a very strong seller's market right now. It has been for the past couple months and it continues. And the data that I'm looking at, it looks like it's going to continue into spring. Now, what is a seller's market? Well, generally, if the market is named after you, that is a good thing. So if you're a seller selling your home in a seller's market, that is a good thing. If you're a buyer buying a home in a buyer's market, that is a good thing. The window of opportunity for sellers right now is very large, but it's not going to last forever. The market is constantly swinging like a pendulum from buyers to balance to sellers and back and forth as conditions and economics change. So again, if you're a seller right now, you have a very strong opportunity in front of you. If you're wondering what your home is worth in this market, please feel free to reach out to me. I'd be happy to give you a free home evaluation. All my contact information will be in the description below, but you can call me or text me at 587-855-1212. Again, all of that will be down in the description below. Now, I'm going to change this video up a little bit. I'm going to get into the data later, but I want to change the format up a little bit. And I want to because I had some feedback on the last video I did, that you guys really like the sort of boots on the ground, in the trenches, so to speak, of what's happening. What am I seeing as a licensed real estate professional? I'm licensed with RE/MAX Excellence, the province of Alberta. What am I seeing in this market representing buyers and sellers? So here's what's happening. There's really no way to sugarcoat this. It is very tough out there for buyers right now. Like I said before, it's a seller's market, a very strong seller's market. The big story in this market right now is a lot of demand and very low inventory. That is the perfect storm for a seller's market. You have a lot of buyers looking for very little options. So it's really, really tough out there for buyers. There is a little caveat there though. Inventory is slowly increasing. I'm seeing it slowly increase month over month. And here's a pro tip. So this is something I like to do because there is no better finger on the pulse of the market when it comes to inventory than talking to the first line of defense. That is photographers, videographers, and stagers. These three people are all people that are going to be getting calls from real estate agents or from sellers who are selling privately to get their home ready for market. And talking to my photographer, my videographer, my stager last week, they are having their phone ringing off the hook right now. They are getting a ton of calls and a ton of demand from agents looking to have a new listing photographed and staged and videoed coming to market. So I like to use that little trick because, like I said, they're the first line of defense. When you talk to these people, you have an indication. Obviously, it's not concrete or anything like that, but it's a pretty good indication, especially if it's coming from a lot of photographers, a lot of stagers, and a lot of videographers, of how much inventory is coming on. So based on the conversations I'm having with them and based on what I'm seeing, inventory is rising heading into the spring market, which is also kind of a seasonality thing here in Edmonton. As the grass gets greener and the leaves start to come back on the trees, things green up and spring comes, a lot of people are predictably putting their house on the market at this time. So the big thing to watch will, as that inventory rises, will demand continue to gobble it up? If demand starts to drop and inventory rises, then the market's going to swing back more into favor to maybe a balanced market or a buyer's market. Only time will tell. Now, another thing I'm seeing, this is kind of another little pro tip, is what's going on in Facebook community groups and the private Facebook group for realtors only here in the city of Edmonton. So let's start with the realtors group first. In that group, I am seeing post after post after post of agents saying, hey, does anybody have something coming on in this neighborhood for this price, this budget? We've seen everything on the MLS. Please, if you have something coming on or you have a pocket listing, reach out to me. So again, that's just kind of an indication of how low the inventory is. Agents are desperately looking for options for their buyers that they're representing to help them find their dream home. Also seeing it in community groups. So I live in St. Albert, and I'm a part of the St. Albert group chat, and I constantly see posts in there as well as individual neighborhood community groups. I'm seeing constant posts from realtors and from buyers directly, also asking the same questions. Realtors are looking for their clients. Does anybody have a home that they're wanting to sell or going to be coming to market? Buyers are posting as well. Does anybody have anything? So also just kind of an indication of the times that we're seeing. So as well, if you are a buyer buying a home in this market and you want some professional help on how to navigate how crazy this market is, reach out to me as well. I represent sellers and buyers and investors. Again, all my contact information will be in the description below. But in a market like this, if you are a buyer, you have to get a little bit creative. And if you're working with an agent, they better be getting creative because they are working for you. And they got to earn that commission. So you got to get a little bit creative and looking and sourcing other options. If you're just looking at the MLS and just waiting for that new listing to come on, well, that's what everybody's doing, right? So, and that's what I'm seeing as well, is a new listing comes on and there is just a stampede of buyers rushing to see that listing because they've seen everything else on the market. When something new comes on, they're all rushing to it to see if it will fit their needs. So another thing that I'm seeing, sort of boots on the ground in the trenches here in this market, is a lot of multiple offers. A lot of listings are getting a ton of showings. Like I mentioned earlier, there's that stampede, that herd rushing towards these new listings, which is generally leading to multiple offers. Not always though. So caveat there, you still have to be priced appropriately. If you are a seller, I'm seeing this a lot too, so another kind of boots on the ground thing. I'm seeing some listings come on that you're just like, whoa, that is way, in my opinion, way overpriced. But that's generally what happens in markets like this. You have sellers who are looking at the media, they're watching videos like this, or seeing social media, everyone's talking about how strong the seller's market is, and they go, hey, I wonder what I could get for my house, and I wonder if I could get a lot for it. So something you kind of see in the seller's market is sellers get pretty greedy. Not all of them, but you do see some sellers get a little bit greedy. They want to see if they can extract as much money out of the sale of their home as possible, which you can't hold against anybody. It's a free market. Everyone's entitled to do that. But seeing this happen with some of these listings, they're just sitting. They're sitting, and they aren't going to be sold. So you still got to be priced strategically if you are a seller in this market. And then quickly back to that creative thing, right? I cannot stress enough for buyers in this market right now, you need to get creative. If you're just sitting and waiting for that new listing to come on because you've exhausted all options, you're just going to be running with the other lemmings, all that herd just stampeding towards the cliff. Everyone is doing that right now. It's just so predictable. You need to get creative. You need to work with a professional such as me who knows these creative options and knows where to look, knows where to source, not just waiting for the MLS, because that is what everyone else is doing. Now, let's start to get into the data side of things. Let me know, by the way. So if you like this sort of boots on the ground, a couple people commented and reached out to me that they like this boots on the ground in the trenches, so to speak, of the market. What am I seeing? What am I experiencing as a real estate professional in this market? Let me know in the comments below if you like this style. I'm always looking for feedback. I want to give you guys the most amount of value. So please, I don't know what you are liking and what you are not liking unless you reach out to me. All right, so you're seeing my screen right now. This morning, I'm recording this video March 12th, Wednesday, March 12th. So the big announcement this morning, not really to any surprise by any means, especially what's going on in the US and Canadian trade tension relations. But the Bank of Canada decided to reduce its interest rate as well, which was purely as far as my interpretation of it, and also what they're saying, purely a play on the uncertainty in the economy and the uncertainty of what's going to happen with this trade war that's happening right now. It doesn't really have anything to do with inflation anymore because they seem to have that met and close to their target. So, and that's what they were previously trying to do with the reduction in interest rates. But let's scroll down to something that I want. You can read this. I'll put all these links in the description below. You can read all this stuff yourself. But again, they're just kind of speaking to, inflation is close to that 2% target. But the heightened trade tension and tariffs imposed by the United States will likely slow the pace of economic activity. So the Bank of Canada is being a little bit proactive here because they don't know what's going to happen with this. Actually, I do want to go on a little bit of a side tangent on this. Again, I am not an economist by any means. I'm an amateur one. I observe economics. I love economics. Find it very fascinating, which makes me probably a little bit weird. But what I've been seeing some chatter about this trade war is it could potentially put the Bank of Canada in a very interesting position, because if prices do significantly rise, which is what inflation is, the Bank of Canada's job is to combat that, and their main tool, their main driver, and their main lever for that is interest rates. So they just finished reducing interest rates, but if prices take off, are they going to have to increase interest rates to bring prices down? But then the other side of the coin is, well, what if the economy goes in the tank, right? GDP just falls off a cliff. Well, their job then, main lever there, is to decrease interest rates. So the Bank of Canada could be in a very, very interesting predicament. I, for one, do not want to be Tiff Macklem right now, because that is something, as far as I have seen and read and can tell, as something that's never really been experienced in recent modern times. You have this rampant inflation, but also massive economic fallout. The Bank of Canada won't really know what to do. Anyways, let's get back to it. So scrolling down here, again, just sort of summarizing what they're saying. Monetary policy cannot offset the impacts of a trade war. What they can do, though, is ensure that higher prices do not lead to ongoing inflation. So that's kind of the Bank of Canada's job. Now let's get into the stats. So again, all these links will be down in the description below. I just want to quickly go over the Realtors Association of Edmonton is who puts out this information that I'm showing on the screen. And I just want to, they always kind of bullet point some stuff that I'll get into later, but I just want to go through that as well. So main title obviously tells the story, right? Real estate in the Greater Edmonton area showing signs of spring thaw. But the biggest thing I wanted to highlight here was, we'll get into all the sales stuff, but it was, where was it? This one right here. New residential listings amounted to 2,723, up 13.2% from January. Now keep in mind, so we're in March right now, but these stats are from February because everything is lagging indicator, right? We can't talk about data until it comes out. So even though we're talking about March right now, the data is from last month. It's from February. So kind of like what I was saying before, right? Inventory, what I'm seeing anyways, and talking to my photographers and videographers and stagers, inventory is slowly rising. And that's what they're saying here, right? It's up 3.2% from January, but down 0.4% year over year. Now, again, interesting to note here is the sales, right? Let's talk about that quick. So sales last month, 4.3% monthly increase from the month over, but a decrease year over year. So that was kind of interesting. Anyways, all of this stuff will be down in the description below. Let's get into the meat and potatoes of all of this. Now, everyone loves, I always talk about this, right? Everybody loves talking about pricing and they are absolutely obsessed with it, which is totally fair. What I like to do, though, is I like to focus on this stuff right here because I think, was it Wayne Gretzky? I think it was Wayne Gretzky who said, do not skate to where the puck is, skate to where the puck is going. Or was it a football player who said, don't run to where the ball is, run to where it's going? I don't know. Let me know in the comments below if I screwed that up. I think it was Gretzky that said something like that. Anyways, that's what this information here gives us. It gives us an idea of where the puck is going, where the market is going, right? Because what's happening here is going to generally be reflected in pricing anyways. But again, everyone loves to talk about pricing, so we'll just go over it quick. I like to avoid month over month because from month to month to month to month, it's not enough an extrapolation of the data. I like to look year over year. So on average, all residential up year over year, 11%. Detached homes up 12% year over year, even though a small monthly decline month over month. That's why we kind of throw those month over month things away. Semi-detached up 9.7% year over year. Row townhouses up 8.7% year over year. Apartment condominiums up 23.5% year over year. I've talked about that in previous videos. It's very interesting to see that statistic because the condo market in Edmonton, basically from like 2008, 9-ish to like this year, last year, pretty much dead. Kind of, we call it like the lost decade. When it comes to pricing though, I do want to pull this up because I think this just shows a better indication of pricing as a whole. The Home Price Index, the HPI, I think it's a better tool for determining pricing, and we can just kind of clearly see it on a graph, right? So year over year, you're seeing that big trend up, and then everything up, 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 everything. I will pull the Greater Edmonton area. So this is all this. Let me just clarify. This is just the city of Edmonton, Edmonton proper, whereas the Greater Edmonton area is all the surrounding communities. So Sherwood Park, St. Albert, Spruce Grove, Stony Plain, Leduc, Devon. I think Devon's in there. Don't quote me on that. I mentioned Leduc. Beaumont, I believe, is in there as well. So same trend, right? Up, 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 up. Everything's up. And then you can see that graph. It's very similar to, it's pretty much identical to this graph. So getting into this meat and potatoes part of it, you know, the whole skating to where the puck is going. My three favorite I always talk about are sales to new listing ratio, total market absorption, and months of inventory, as well as a little bit of days on market, because that is important too. So let's start with sales to new listing ratio. Last month we had 64.5%, which is still strong, not as strong as we've seen. What did I see the last couple? Yeah, so December was 106.4%. Screaming seller's market. November of last year was 88.6%. So we've come down a little bit. And if I compare that to last month, January's, the sales to new listing ratio was 67.5%. So coming down a little bit. So you're seeing this little tug of war between listings coming on and then the sales immediately happening within that same month. And that's what that sales to new listing ratio is how many listings came on in the month and how many sales happened. So 64.5%, that number, that metric doesn't exactly explain it being the strongest seller's market, because it's really on that low end of the seller's market, but still a seller's market nonetheless. And we get that number by dividing how many sales into how many total listings. So again, I know I said I don't like the month over month, but in this regard, I really do like month over month statistics, because look how much of an increase in new listings happened from the month previously. Quite a strong amount of growth. Like I said, I'm seeing listings coming on. I think spring, it's going to be that interesting tug of war between will demand keep up with how much inventory I think is going to come on. I think a lot is going to come on, which is generally what happens in sellers markets, right? As sellers hear about how strong of a market it is for them, a lot of them get curious and they want to consider selling them home, or they've been on the fence about selling their home and they've been waiting for an opportunity like this. That's what always happens in sellers markets. Too much inventory comes on, or demand drops, or both happen. Inventory comes on and demand drops, and then it swings back to either a balanced market or a buyer's market. So what we're seeing here, the month over month growth for sales, definitely not as strong as how many listings are coming on. So that's that tug of war happening right there. Total market absorption. Now we take how many sales happened, divide it into how much total inventory, and that's at 42% currently, which is not much of a change from last month, which was 44.4%, and previous months were 41.3 and 41.4. So that number isn't really changing all that much, still seller's market. And then probably my favorite metric, I don't know if I have a favorite one, but I do like this one, because this one, months of inventory, is what it is. And it just shows, at the rate of how things are selling, how many sales are happening, and how much total inventory is there, how long would it take to exhaust all that inventory? This one is a very strong indicator of what kind of market it is. So we take all of the inventory in the current market, 3,014 listings, divide it by how many sales are happening a month, and that gives us 2.4 months. So it essentially would take 2.4 months to exhaust all of this inventory. But thing is, not all of this inventory is going to sell. Not every house sells, because a lot of, like I said earlier, some people are greedy, some people are just unrealistic about their price. Their home just doesn't meet criteria buyers are looking for. So for whatever reason, the home doesn't sell. It either expires, or they terminate the listing, or just goes away. 2.4 months, if we compare that to last month, 2.2 months. So slight bump in months of inventory, but nothing really to get too concerned about. It's still razor thin seller's market. And then days on market, if we compare, so the light blue to the darker blue, light blue is this year compared to last year, basically across the board. So last year detached homes were 47 days on market, this year 39. Last year semi-detached were 42 days on market, this year 26. Last year 43, 28, 61, 49, 49, 37. Across the gamut, every single style of home, days on market is shorter this year versus last year. Now, I hope you found this information helpful. If you have any questions whatsoever, if you're buying, selling, or investing in this market and you want some professional advice and professional representation, I'd be more than happy to give that to you. Please feel free to reach out. My name is Mike Banks. I'm a licensed real estate professional with RE/MAX Excellence. All of my contact information will be in the description below. Please subscribe to the channel for more content like this. And again, let me know in the comments below what's working, what's not working, what you want to see, what you don't want to see, because this channel is for you guys. I'll see you in the next video.